Hello again, everyone. This is Joe Henches with Beyond the Chart, your source for exceptional video analysis of stocks, ETFs, and indices. Welcome back. Today is Wednesday, July 22nd, and we're going to take a look at the market action of the last 2 days and look at the indices like we normally do on Wednesday, which includes Germany, India, and China. And then we're going to look at 4 stocks tonight: Apple, Micron, Skyworks. I think it's Skyworks. Pretty sure it's Skyworks. I know the initials, but yes, Skyworks Solutions and Caterpillar. Okay. All right, let's take a look here at the Dow. Start off here. The Dow was down 68 points today, following on the big move down that we had yesterday. So in the last 2 days, we've gone from a close of 18,100 on Monday to 17,851, down about, what is that, 150 points? No, 250 points. Yeah, about 250 points or so. And we were down about another 50 points here too. So again, just like I mentioned on Monday, I've got no reason to change my wave count in here. This is still a lower low that we've got. We're still getting a lower high, and we got lower lows here. So we'll see. This is continuing to push. If this is the wave count that I'm expecting, if this is a part of the minute wave 3 working its way down, this should start to accelerate. And that's what I'm watching for. S&P 500, slightly different wave count because this went higher than this peak here on Monday. But still, I'm calling this minute wave 3 down, okay? And minute wave, I call it minute wave just because we're working a minor wave 1, all right? And the 5 waves within a minor wave, I call minute waves, all right? So each level, you break down and have a nomenclature for each level. So right now, I'm looking at this to start accelerating if that's truly what we've got. All right, the next one is the NASDAQ. Now, this is kind of interesting here. And you know the note I'm putting here, island top question mark, because that's what this kind of looks like to me. And you know, on Monday, I called and said, okay, this kind of looks like a broadening top. Some people call this a megaphone type pattern. But I call it a broadening top. And until this fails, that's what this looks like, which means the way it confirms the top is to break this low point right down here. But I thought it was interesting with this gap down that we had today. This little island formation that it formed seems to be reinforcing this turning point here, and we'll see whether we continue to get moved down. Now, why is this a white bar? Because it gapped down and it opened right here, and it closed above the open. Okay, so it closed above the opening trade for today, so that's why it's white. Now, I'm kind of surprised that that's not like a dark blue, honestly, because, well, no, it shouldn't be dark blue. Dark blue if it was up, but anyway, it's a down day. The close just happened to be higher than the open. That's the net out. New York Composite. This is getting interesting. Are we getting our right shoulder here? Are we rolling back down? Is this picture starting to... Oh, there's something else I was looking at. I'm going to pull this in. This whole scenario here of this head and shoulders potential coming in, and we're going to need to see this to continue on down here and break this neckline for this to actually come true. So that's what I'm going to be watching for. All right, so the next one is the Russell 2000. And the Russell 2000, again, this is just like the NASDAQ today, gapping down and then closing higher, closing up here. Now, this was an up day versus the NASDAQ being a down day. Russell was up 3.78 points today. But it's still in this little short-term downtrend, so we'll see if we continue. And the other thing I saw is this looked like a pullback to this this trend line that was broken. So it broke this trend line, comes down, pulls back to it, now is rolling over. We'll have to watch to see, does it come down and break this trend line? And if it does, again, the key on these trend lines is the closer to horizontal a trend line comes, the more powerful the break of that trend line. So if you have a trend line that is, pretty vertical, or high angle, when it breaks that, that's not nearly as important or as dangerous as when it breaks a much more horizontal trend line. Okay, so that's it on that. Let's take a look at the DAX, the German DAX. All right, so we looked at this 5 days ago, and that was right here. And so it popped up on Thursday, Friday, and now it's rolled back down. And actually, a week ago on Wednesday, it closed at 11,539, and here we are at 11,520. So we're down 19 points over the last week of looking at this. So this is going to be interesting to see whether, now it did push to a higher high in here and breaking out of this downward channel. So this is going to be, does this fail, or is this, turn around in here? India is the next one. Now, India, I know we talked about, I thought we were getting another third minute wave up. And again, here was Wednesday, a week ago, went up Thursday, Friday, came back down, and then today had a nice big bullish looking bar today. Didn't fully engulf the previous day, but it's pretty nice looking bullish bar. Let me blow that up a little bit for you. You can see that a little bit more here. So India closing at what, 8633.50, up 104 points today. And that's India's Nifty 50. Shanghai Composite, China Shanghai Composite. All right, the interesting thing I'm noting here, this looks like counter trend move to me. And you can see the 21's below the 55. Now you still have the 55 above the 233. So the long-term trend is still up when you're looking at the 55 versus the 233. But this looks counter trendish, and we've got very compressed days. As a matter of fact, this day today is the narrowest range, trading range, since back up here. And then this day, and I'm not sure either one of these days right in here, were the narrowest since like back down in here. So this is going to be interesting to see what we get tonight. U.S. time. China starts trading, I think, around 8:30 p.m. Central Time, 9:30 Eastern, I think. Don't quote me on that, but it's around that time anyway. So, and that's their Thursday. So, all right, that's it on China. I'm kind of suspicious as to whether this might break back down again, but either way, it's very compressed, which means expansion follows compression, like I've talked about. All right, let's take a look at the short-term trading index. Where are you? There we are, short-term trading index. So we've got a reading on the trend of 0.96. The 10-day is 1.12, so you can see the blue lines pull back down just a little bit. The VIX is a little confusing to me today because you look at this action, and over the last 2 days in here, basically, so Monday it closed at 12.25. Today it closed slightly, 12.12. So we're down slightly from Monday, but yet the stock market's dropped the last 2 days, 250 points. So on the Dow. So I'm a little bit confused that why the VIX is not responding and not rallying more than that, but just kind of making a note of that. And we're sitting down here in this low range again. And it could be getting ready to pop out of that. The next one we'll take a look at is the high-low, and this is also very interesting today. There were actually 339 more new lows, 52-week new lows today, and when you net that against the new highs, there was a minus 265 was the net, more new lows than new highs. But the new lows actually was about equal to what it was in here. And that then you got to go back to December for another reading on the new lows. Let me see if I can bring that up. And new lows daily on the New York Stock Exchange. Here's what I'm talking about. 337 more new lows today, or there were not more, but 337 52-week new lows today. That was just shy of the reading on June 29th. And these two readings are the highest readings since back over here in December, where we had a 431 new lows for a day. So we're starting to push this extreme readings here. And on the net, you can tell, again, we're coming back down. So it's reinforcing the downward move that we're getting off the market. And then, following on to that, I want to take a look here at HYG, the high yield bond fund. So again, the selling here is an indication of risk off, which means they're moving away from the high yield bond funds and selling these. And it's an indication that the market, it just reinforces that the market's headed down because people are taking risk off and moving out of stocks. And this is the lowest low of the year, okay, reading. So it just passed through that peak here, and we're rapidly approaching the December low. And I've talked about this before, and that December low is dramatically below the October low. So you can see this picture that's happening here versus the picture that you see in the stock market, which is just the opposite. Okay, TLT, let's look at the long-term bonds, treasury bonds. Now, the wave count has gotten a little confusing to me. This looks like a 1, 2, 3, but what this is doing in here is anyone's guess. It's chopping sideways. I'm not quite sure what it's doing. This doesn't look like a little 5-way move. This looks like a 3-way move to me. We could be getting some kind of 3, 3, whatever. So the bottom line is the trend from here, January 30th, is down. Okay, so that's what I'm looking at. And short term, it does look like it's trying to push, but it did that here too. But we do have we got the 10 above 21, which started to do that here. But anyway, that's the picture. Closed 119.6. This picture is still a little unclear, other than the fact that since early June, it's basically been chopping sideways. And the next one is the dollar index, U.S. dollar index. And this was up basically about flat. I think it was up 0.09 today, so not much after yesterday's down move. And of course, the down move, then gold and oil kind of rallied yesterday, but then they kind of came back today, and we'll look at that here in a minute. United States oil ETF. And this is pushing down and continuing the downtrend. And remember how I talked about when it broke this low here, that was pretty negative, and yeah, it's continued to do that. So we are coming down, and where's the intraday low? We're down to this low right here and rapidly approaching this low. So we'll see what happens as we get down to these previous lows of March and we've actually gotten to the January low. Now we need to get to the March low. The next one is gold, which also continues to get whacked. Pretty sharp sell-off, which is accelerating exactly like I would expect with a minute wave 3 down, 3 of minor wave 3 working its way down. So let me back on out of this. Now, okay, yeah, this is the other thing I wanted to mention here on gold. The reason I got those dotted lines in there is I think that I drew these dotted lines from the peak here and the bottom here, and then took those all the way across and said, okay, this is potential support that's going to come in. Okay, so down in that area, right down in here, and I've got this written somewhere, 100 to 102. Okay, so I see 100 to 102 as a potential area where support could come in. But again, you got to realize that what we're looking at when we look at this, let me look at the bigger picture here, and let me get my little marker going. You know, if this is doing what I think it's doing, if we're doing a fifth intermediate wave, then here's 1 and here's 2. Then we're doing a 3. Okay, then we'll probably do a choppy sideways 4, and then we'll come on down, you know, 5. All right, and it may do that a little bit. You know, I need more space. I need more space on the screen. But that's what I'm talking about, because you got 1, 2, and now we're getting this 3. We may get the pause right in here on 3. We'll have to watch and see what the wave count is, and then get a choppy sideways 4 because we had a pullback. Because we had an ABC pullback here, we should get kind of an opposite of that for wave 4, and then come on down with wave 5. And it may come all the way down to this here. I don't know. We'll have to watch and see. All right, let's see. That's gold. Let's take a look at our 4 stocks tonight. Take a look at Apple. Of course, everybody's been talking about Apple, and everybody's been looking at Apple. And I've already got it up, so let's pull it up. So, you know, earnings last night, people were disappointed or whatever, and so now I had the big gap down, and, you know, white bar because it opened at 121.99 and closed at 125.22, but it was still down 5.53 points today. So now what I'm watching in here is the fact that this sharp pull down, do we come back? You know, is there, what kind of gap is created in here? Do we just go sideways? Do we pull back a little bit? You know, what happens? That's what I'm going to be watching. And because this is a potential right shoulder, and here's a neckline. And this is a big top. Okay, this is what it's looking like to me. And this action today has kind of reinforced that picture in my mind. So this is what I'm watching closely on Apple. Now, Micron Technology, this has been in the news because of that takeover bid for $21 a share. And wow, the stock's really at $21. It's because nobody believes that takeover bid is going to work, apparently. And I thought it was interesting that I didn't want to mess with this because that takeover bid was hanging out there, but the stock was actually telling, you know, when it got this close below the 10-day, this was a resumption of the trend to the downside. And now, yeah, it came back down. It only moved 1. That's why a lot of times in terms of trading options, I start to hesitate to trade options on stocks that get below $20 a share, just because you know, you don't get paid on percentage, you get paid on dollar move of the stock. And you know, a 10% move at 40 is $4, and 10% move down here is $2. So anyway, it gets a little bit harder when you're down here. Although the option prices, you know, granted the price of the option is different, but anyway, on Micron, not sure what's going on with this except for the fact that the trend has resumed down. And we'll see what plays out. The next one is Skyworks Solutions, and I believe these guys. What I read in the press is that these guys are a little bit related to Apple. That they're impacted from the Apple results, supposedly. I don't know a ton about their actual what they do, but you know, got popped down. Looks very similar to the Apple type move down here. Now this was trending above the 10, so that was probably a little bit of a surprise to folks that were sitting here. And the only thing I'm seeing when I look at this is this trend line from late April was broken on July 6th, and it came down and then it pulled back up to that trend line, and then has pulled down here. So this is going to be interesting. I drew another trend line with this low, with this pivot low here on July 9th. Does this trend line hold? If this trend line breaks, then I think there's a shot of it coming down here and maybe testing the 233-day moving average, because we are trading below the 55-day. We got the 21-day coming down, so that'll be interesting to watch. And then the last one is Caterpillar. And Caterpillar has really been going down here for the last 4 days and pushing, and pretty dramatic sell-off today. It was down almost 3%, 2.99% today. And by the way, those other stocks that I looked at, those 3 stocks, were all down over 4%. And that's why I wanted to take a look at them tonight. And Cat, it's going to be interesting. look at this picture, okay? And when I look at this, and then we'll wrap up here. Look at this picture here, okay? And then let's take a look at, let's go back and look at oil. I'm always looking for patterns. I'm always looking at things that, if I can find it, United States oil, I know I had, there we go, right there. A similar type pattern, okay? Low, come down, lower low, bounce up, kind of flat and rolling over, and you kind of come back to Caterpillar, and to me, it looks very similar. Went to a slightly lower low, bounced up kind of flat, and rolling over and challenging. So, and CAT's come down, quite a bit from the, when oil peaked last summer. So it's kind of in sympathy with that, and rightfully so. I mean, there's a lot of, CAT sells a lot of pipelines, a lot of big off-highway trucks. The trucks that are used up in the oil sands in Canada and Western Canada up there, those trucks are so big they have to ship them in parts and assemble the trucks up in Canada on location. They're so big. So, a lot of CAT stuff is going to be, impacted by what's happening with oil and by what's happening with a lot of the commodities, coal and ore and a lot of those types of things that are going on. So it's going to be interesting. And tomorrow morning, CAT's earnings are going to be released. I believe before the market opens, the earnings are coming out. I don't think it's after the market. I think it's before the market. Anyway, so look forward tomorrow on Caterpillar. All right, that's it for tonight. Long video. We'll wrap it up now. And again, if you're watching the video anywhere else besides my website, head on over to the website. Check out the posts, the information I've got for you there, education videos, courses I've got available. And also, if you're not a subscriber, it's easy to do. First name and email, and you're good to go. And you can get access to the Trade Ideas page and Trade Ideas videos, and the free PDF I've got for you. So, all right. I'll be back on Saturday with the weekend update, and we'll talk to you soon. Have a good Thursday, Friday, everyone.